Here are 3 cheap stocks that are currently oversold according to the Motley Fool. I'm Hugh from Wall Street X, and at number 3 we have Merck & Co, MRK. The WSX 1 year for this is $97 or a 14.5% upside, but analysts are saying it's going to hit 108.77 this time next year, which is a 28.4% upside. We put the risk as medium, we put the reward as high. That's going to make Merck & Co a buy for us because it has a very low valuation, pretty average debt levels, fair revenue growth forecasts, and they have beat all 4 of their last earnings calls. Revenue is trending up and net income is flat though, but most analysts are going to be a moderate buy right now on Merck & Co. And now that it's down from its peak of about 131 to where it's at today at like $77, Merck & Co.'s valuation is now at a point where it's starting to look really attractive given its decent earnings growth forecasts, and for us that's going to be a buy. And number 2 on the list is Novo Nordisk, NVO. The WSX 1 year for this is 64.08 or a 16% upside, but analysts on average are saying it's going to hit $49, which is an 11.3% downside. We put the risk as medium, we put the reward as medium, but we still put this one as a buy because it has a fair valuation, pretty average earnings forecasts, but they have been beating their last 4 earnings calls. They have pretty average debt levels. Revenue and net income are doing really well, and that's the key with this one. Most analysts are actually going to be a moderate buy, even though they're bearish with their targets. Most still put it as a moderate buy, probably because of those earnings beats and the good revenue and net income so far. But overall, with NVO down from its peak of $142 down to just $56 today, it is partly justified by the Ozempic controversy, I'll give it that, but from a valuation and growth perspective, it's looking to be slightly oversold at this time and a pretty attractive buy. Number 1 on the list of the cheapest and most oversold stock you can get right now, according to the Motley Fool and according to us, is Pfizer, PFE. The WSX 1 year for Pfizer is at $26.77 or a 7.6% upside. Analysts 1 year from today think it's going to hit $27.18, which is a 9.2% upside. The risk we put as medium, the reward we put as medium. We put Pfizer as a buy just like the other 2 because of the low valuation, mixed earnings forecast for this one, but they have beat their last 4 earnings calls. Average debt levels, the TTM revenue is holding and the net income is improving a bit. Most analysts are going to be a hold on Pfizer though. But down to $23 from $53. They have had a lot of controversy lately, but they have been consistently beating those earnings calls, and that's so important. And at these levels, with such a low valuation relative to their pretty decent earnings forecasts, we think this is pretty oversold. And just like the others on the list, I mean, investors should expect high levels of volatility with all of these, particularly in the short to medium term. But honestly, all 3 of these are really good picks for oversold stocks that if you can stick out for the long term, we think there are gains to be had given these fair earnings estimates. And those are going to be the 3 good, cheap, and oversold stocks that you can pick up today. If you want to see the top stocks that Wall Street Bets users are talking about right now, go ahead and check out this video right here. Otherwise, be sure to give this video a like, subscribe if you enjoy the content, and I'll see you next video.